the fuck just happened, gang? But this is a trade I just took. Well, when the market opened. Oh yeah, it's already there. So I see this fair value gap. Oh wait, let me go. Mm, mm, I think it's. Mm, mm, mm. So just act like we didn't see none of that. Let's see. So going into market open. Well, not market open. Well, I guess it is market open, but for Asia session, um, I'm looking to see a retracement off of this 15-minute fair value gap, because these fair value gaps act like a hub for price. Price is either gonna come up and touch it and then continue lower, or price is gonna run through it. Either or, but you gotta react to whatever you're seeing. So I'm looking. Market opens, and then it touches the fair value gap, and then okay. So this going up. When we're going up, we're bullish. When we're coming down, we're bearish. Like thinking of it as like bare bones, and then think of it like a bull's running through shit. So that's how you determine that. And so we were bullish coming into this 15-minute fair value gap. But if you look, the 15-minute fair value gap is these are all coming down. So we're bearish. So a bearish 15-minute fair value gap. The higher time frames are always going to be more powerful than the lower time frames. So you want to pay attention to the higher time frames, because the higher time frames is where price really wants to go. The 1 minute is just a bunch of noise and distraction. It's like a war zone for real, like the true war zone. So on the 1 minute, we come up into this 15-minute fair value gap and then immediately reject off of it. And once we get a candle closure, like meaning the candle's fully done, the 1 minute candle is fully closed, it's gonna be down. Well, if it is down here under this low, that's what we call a change in the state of delivery, because this was going up and that was bullish, and now it's coming down and it's bearish, and it changed the state of its delivery. It's no longer bullish, it's now bearish. So then I'm immediately looking for a short position. So I grab my tool. I would only put my stop maybe right above the low. I think I might have entered this a little bit too early, but either way, we're targeting this low. And then even this is New York PM. So this is another point of liquidity. Liquidity is where price wants to go and wants to travel to and from liquidity pools, using fair value gaps as like lily pads to jump to and from. So, oh wait. Okay, then enter a sell position. I only entered with one just because it's on paper, and I was like, whoop de doo. But then when I got a candle closure, I want to say it was right here, even though that's really close to. Wait, that's really close. Cause so we want this down here. Well, what is this? A 172, but I'd be targeting this liquidity pool, so not just a random dollar amount or a random like position size. You want to be targeting liquidity. So for a safe bet, you could go right here, just because that's a little bit closer up to this point right here, which where price really wants to go. And then I'm adding another contract right here. That's a little bit advanced. You don't need to do that, but I just did it for RR, risk to reward purposes and just to get more money from the trade. So instead of entering with one, you could have just entered with two and let it ride down, but I didn't do that. So I'm confirming that, and then another one's supposed to be added on right here. So we'll go ahead and let price play out and see what it wants to do. And so now I'm in for two contracts. It tagged me in. So now my immediate droppage. Only because the response from that 15-minute fair value gap is very powerful because it's a higher time frame fair value gap. And then even then, you don't need to be out of your trade then. If you see an immediate candle like that and it's already coming up and almost taking your stuff out, you might as well lower your take profit and then go ahead and move your stop loss, and then you can trail all the way down. You want to be careful though, because if price comes back up and wakes you, then you're going to get stopped out, but you're still going to be hitting a good trade though. So that's just the one trade I had took today at 8 o'clock. And now, I don't know what the fuck the market doing, twin. Look at this shit. I don't know. This whole month has just been super wacky for real. Especially with the war and shit. You got oil at fucking $105 a gallon, twin. Or whatever they do in it. I just find that crazy. $70. It's gonna come to this liquidity point right here, because that's a previous session high. There's ways to identify all of this stuff. And then there's even more liquidity here and up here. So it could continue to go for real. It just depends. Asia's not very volatile, meaning there's not that many people like trading it, obviously, compared to New York Open when everybody and their mama and like actual investors and stuff like that are trading. Because you want to be trading with the investors and the big people in the market. That's what we do. That's what ICT concepts are. But we ain't got no money in this. Ain't no sense in watching it. We might pop back to it. Gold. This shit look wonky as fuck. And I'm gonna change my chart colors because I don't like them no more. I want something chill, bro. And then price can go ahead and retest this fair value gap. When a fair value gap is created, that shows who's in control. So if this is going up and it creates alright, so a fair value gap is 1 candle, 2 candles, 3 candles. But you see how there's this box in between from this wick to this where would be a bottom wick. There's all this gap in between of this candle. That's what we call a fair value gap. And price leaves that behind whenever one person, well not one person, but like either the bears or the bulls are moving like with power. So like leaving behind fair value gaps is good because it's going to come down, retest that, and then shoot back up, or it's going to run straight through it and continue down. So that's how you mark them too. So it's a 3 candle pattern with a gap in the middle. And so it would be like a bottom wick right here, but not really because there's not one on that candle, but this is still a fair value gap. So, and you see price just went up and hit that.